Hi, it's Vegan Bankery on the wire, and we continue to talk about money, and we continue to talk about the shares, and this is episode 5. We'll start to talk about the indicators. As investors, they have to determine somehow to compare the shares, how the price is going. There are different ways how investors can compare the shares, the price of the shares. There is a fundamental analysis, there is technical analysis, and we start with some basics, the most common ratios, like the numbers, how investors are looking. Is the price is right or wrong? Let's have a look which common shares are there. So this is the PE, price per earnings, price per share per earnings, and EPS, earnings per share, PG, price to earnings growth, book value, return on equity. And we'll start with the most common one, PE, which is calculated price per share divided by the earnings per share. So the price per share, usually it's taken the current price of the most common market for the shares, because the share can be traded on different markets, different stock exchanges, as we talked last time. And earnings per share, this is the total earnings divided per number of shares. Let's have a look. And this is the numbers about shares. One of the largest company which is involved in the water treatment, in the water services. Yesterday was the day off in Paris, so we do not see the prices bid and ask on the Paris Stock Exchange yet, but the price was available, and it was 12.68. And usually, I took the screenshot from Yahoo. Usually the EPS is available, it's calculated, and it's 0.47. So we come into the PE ratio here as well, as you see. It's 26.98, and it's calculated by 12.68 divided by 0.47. It's relatively high because the average PE ratio for the S&P 500 index, so the largest 500 companies traded on the market, is approximately 15. Good or bad? We'll compare with another company. Also from the same industry, 3M. Actually, they're more diversified, but they're also one of the leaders in the water treatment, water services industry. And the US was open yesterday, so we see the prices on the US stock exchanges, bid and ask, as we talked last time. And the most common prices is here. And we do the same. So we take the price, divided it by the EPS, 0.46, and we come into PE ratio 18.04. It's still higher than the average. And usually probably you would consider to invest the companies with a low P ratio, because potentially have more earnings for the less investments. You pay less price, get more earnings. But it may be also different factors to be considered. Maybe investors are expecting that the Suez is going to show better earnings in the medium run, or other things is to be taken into consideration. For example, sustainability. You always can find now the sustainability rating there, because sustainability is now to be a factor of the risk. As well as important, then you make analysis to have a look, because the earnings per share usually, this is the 12 months historical rolling over. But in some analysis, you can see that the forecast is taken into earnings consideration. So it's important to compare the same methodology calculated ratios. And we'll continue to talk about how to compare the shares, how to analyze the shares in 2 weeks' time. If you don't like to miss the next episode, subscribe to the channel. Questions are very welcome. And see you next time. Let's talk about money. Let's talk about financial instruments, financial markets. See you in 2 weeks.